All right, we need to be talking about what's happening going on to Monday morning, the big news coming into Thursday and Friday, and how you can be prepared to this and what stocks you need to be looking at to make the most money during this time. Now, basically, if you do not know, we are riding this overall trend, and this is the Nasdaq 100. Since overall December, you've continued to hit this range, and now you've flipped it, but you have decision time coming in. Now, I'm going to go over what is happening this week, and then I'll give you my projections of what I think is going to happen, and I'll give you stocks that I'm liking as well. So what we're going to do is hop right in here. Before we get to that, I ask you to consider doing two things: liking and subscribing. Every single day, I am giving you these videos, preparing you for the market coming the next day, and how you need to be looking at this news to be prepared so you don't get burned. Now, when we go into this news, what's happening? You have some minor news throughout the week, but the big news comes Thursday, the 25th. This is when we have GDP coming out. This is going to be very interesting. We've been covering basically everything being pushed out to us right now with all of these flips back and forth. And then you have Jackson Hole coming in on Friday, which is when Powell will be speaking about rates, probably GDP, growth in the overall economy, and has inflation peaked. These are going to be all the things going on right now. Now, before we even get to that, I want to go over where the market is and what's been happening. Now, a few days ago, and we'll actually tell you right here, it was this day, 4 days ago, we started talking about what's happening. Now, although the thumbnail may have been quote unquote bearish, it was not really calling for a dump, and I have not started entering those short positions yet. And I know you're looking at this and you're like, Tyler, it probably would have been a great day 4 days ago to get into this, around the 15th, right? No, not yet for me. Again, because if we go back and we look at everything that's happened, again, I'm going to tell you the going trend before we were getting major sell-offs back here. Now, you look at this and you say, well, isn't this a sell-off? No, in my opinion, these were retracements to continue to go back up. Now, you can see you're breaking previous highs, which is something we were looking for, but I'm going to go into more depth why we're not entering shorts, at least for me right now. All of these days are big news days. If you go back, you could have gotten to these moves while they were dropping and still made money. So, I mean, you're not entering blindly or trying to find a top, okay? So, for instance, we weren't entering puts right here when you pop back up and pop back up. We were entering puts about right here last time, and we rode this all the way down, right? And so when we entered puts here, we entered right here near the end of the day once you broke out of this level, and then you rode it all the way down. So we had CPI news, Powell talking about inflation, etc., and it's looking like we have a day coming up as well. Now, going into these meetings and GDP, I'm going to give you my overall outlook and what I'm looking for. Now, despite the selling that you are seeing, I will say you are seeing selling. This is the 4-hour chart, so you're definitely seeing that pressure. I just don't believe it's as strong yet. Now, going into Thursday and Friday, what am I looking for? I personally would like to see some downside here. I want to see NQ come down to about 13.1, possibly 13,000 flat. That's where I want to see us go. I want to see us get some hard retest of these major breaks that we had, because these were the major levels that we had to test a lot, and we spent a lot of days at these key levels. 13,000 specifically. You can go back and see how we struggled there for a while. From there, what I want to see. So going into basically Monday, Tuesday, Wednesday, I would like to see downside. That's what I would like to see. Going into GDP and going into some of this news here, I'm going to give you my opinion. You can do with it as you will. You also have PCE coming out as well. I believe that's Friday when Jackson Hole is. I believe going into these overall gatherings and data outlooks, I do believe you're going to be strong. I believe GDP will probably be decent based on what's happening with oil prices still. If you don't know, we have looked at oil quite a bit, and oil is still on the downturn, right? It's not bouncing yet. So since it's still going down, we still expect inflation to be quote unquote going down. Now, we do expect oil to bounce eventually, but right now it's still going down, which should affect this data report in a positive way, right? And then as we'll go into Jackson Hole, which is Friday, I don't think Powell's going to say anything negative because we have these midterms coming up. And I know people keep sending me charts of midterms, and everyone's saying, well, midterms historically do well. They do this, they do that. So this is a message that someone was sending me on Twitter, right? And basically it's showing you during midterm election years, September and October, you go down. All of the years, you look better, right? Now, what they're not taking into account, what people aren't looking at, is the whole picture. And it can kind of be hard to do that. What about midterm election years during a quote-unquote possible recession or a major dump when inflation is spiking? They're not going to really show you those years. So when you're doing this research, it's not as easy as just looking up for a chart of when midterms happen. You need to be looking at what's really going on around the whole economy. And that's something that's happening. The Democrats need this in order to get back into office again, right? They desperately need a win here, okay? They do not want Trump. They do not want DeSantis. They do not want a Republican coming in, okay? They want to reign supreme like they were when they had, '08 basically all the way through 2016, right? They want to get back to those days. So that's where you're at right now. So going into this, again, I want to be very clear with what I'm expecting. I expect a little bit of downside, and it's what I want to see, really, because it would set up for the most profitable outcome. So I would like to see downside, okay, to 13,000. I would love to see that. And into GDP and into Friday, I would expect upside from those news reports, because I do not believe the Fed is going to say things to hurt themselves right now, especially with the Dems up for these midterm positions. And that's just my personal opinion, and that's how I'm looking at things. But however, if we continue to look, and while we could expect more downside, is because look at junk bonds. We look at junk bonds over the past, we'll go to the daily chart. You can see the past 1, 2, 3, 4, 5 days, red. You have not had 5 red days. Essentially, you have not had 5 red days on the J&K all the way back since May. Even through that dump you had back in June, you did not have 5 red days in a row. And that's what you're going through right now. And it's setting up for possibly more downside of these junk bonds down to 94, possibly 93. We go to DXY, what's happening with our currency? Again, popping up, going crazy. We have the euro inverting below the dollar. It's right there, right almost below. You can see it. It's about less than half a penny from crossing down below. So that's my opinion. That's what I'm looking for. Now, we also have some really interesting stock setups going into this as well. Now, again, I would like to see a dip, but again, I want to be very clear. I am not trading stocks towards the downside. People keep DMing me, they're like, well, Tyler, why aren't you taking these downside trades, yada, yada, yada. And I want to be very clear about what's happening if you're taking these downside trades and when you're getting the movement, right? So if we just go really quick to opens, we're just going to look at our daily opens, go to SPY. When you're getting a primary source of all your movement, for all the people that are telling me, Tyler, I've been making money on this downside, unless you're holding overnight, taking that gamble right here, when are you making your money? You're trading the chop sideways. I mean, yeah, you could hold your puts all day long and write them down $3 and hope that it doesn't kill you, but is that really worth it? Look back at a Thursday, upside. Look back the day before. Chop, upside. I mean, it's just nonstop. You're getting all that movement in the pre-market, and I'm not willing and I'm not going to hold these trades overnight, especially a put until we get negative news. And so I'm not BSing you. I'm not lying to you. I'm just slowing down my trading right now, preparing for what's going to come, because we have been looking at these trends and we've been timing them pretty well here on the channel. And what do I keep saying? The goal is to reduce risk, people. Reduce risk at all costs. That is our primary goal when we're trading. And we want to maximize our profit potential. So if we are going to miss out on an opportunity, that is okay. Why? Because we are not losing money. The number one name of this game is preserving capital, whether it's long-term or short-term. That's what you need to focus on. Sorry, words got a little slurred right there. Now I'm going to go into some stocks that I'm liking. Number 1, Tesla. Now we have a lot of stuff going on here, so bear with me. I'm going to do the 15-minute chart so you can see this. Now, I'm going to go ahead and get rid of some of these top lines up here because you really just need to watch 2 key areas. You have your major level, about 886, and then you have your giant support down here where you just continue to find buyers all throughout 870 to 840. I know I hate having big levels like that, but it is what it is. I'm not looking at short Tesla until you get below 840. Once you get above 886, you look strong. So what am I looking for here? If you get a confirmed move above 905 to 910, I'd be looking for calls, and we're looking for a 940 test. That's what you'd be looking for. If you get down here in these key levels, back down to 850, 840, around, again, it would have to time into where I'm looking at. I'd be looking for calls around 850 to 840. We want to see that range continue to hold because it has held so strong, which again are your previous highs. We talk about this over and over again on the channel. That's what it looks like there. I'm not looking to short this down into this range. You can do that if you want. That's just not what I'm looking for. But if you're looking to get into those shorts on Tesla, what would I be doing? I would be looking and waiting for a close below 886, 885. Once you get below this level, then you look for the retest and you try to ride that down. That's how I look at it. That's how I would set my stops. That's how I'd be moving there. Now, next one. I also want to talk about NVIDIA and semiconductors. Semiconductors had a beautiful run, ladies and gentlemen. Great run. Now, you are trying to break down. If you hold below 178, you're probably looking at a retest of 175, maybe even coming down and testing this level down here at 167. If you can somehow start to move back above the monthly, people, this is what we're looking at. And AMD is going to be the better play. But if you can get back above 882, all the way back up here, then I feel better back above the monthly. But as you stay below this monthly, I am not interested. Okay, so if you stay below here, I don't want it. You want to get above or retest, and then you're looking the retest of 182. AMD is the better looking play, the safer play. If we go back to the 4-hour chart on AMD, I want to cover this extremely quick. So you're sitting in a pennant and you're breaking down out of it. However, you're still in that major support from earnings around 95, 96. If you go back and look when we got those entries, when we were talking about this, we had the $100 calls. We made an absolute bag on those. This is where we were looking to get our re-entries, and you're still there right now. If you hold this area above the red line, which is the monthly level, about 95.8, you look strong and you're looking for upside pressure. If you get below, then you're looking for that downside pressure. But again, I don't even want to or care to trade the downside pressure. Next up is going to be Apple. Apple's been the strongest and probably best stock there is. Why? Because they continue to get upgraded. They have 220 upgrade. They have a 200 upgrade. It's going crazy. If you look at the one-day chart, look how close this is back to its all-time highs. You're literally right there. So as we come back to Apple, I'm not saying to get calls or anything like that right now, but what am I looking at? I am looking for you to hold this weekly level, which you continue to hold so far. If you can get back above 170.5, in my opinion, you look good. If you start to flip this area, really it goes all the way down to here. If you start to get below 171, then maybe you're looking for that downside pressure all the way down to 168.5, possibly 168. But I just don't think the downside pressure is there yet unless we get a whole market flip. And Apple has just been trending to the upside for literally the past 4 to 5 weeks nonstop. So Apple continues to look very strong. But as we look at some of these other plays like Meta, you're getting below your key levels. If you look at Netflix, you're getting below 242, which we mentioned was a huge level there as well. So you're looking for that test of 230 now. You're starting to flip on some of these. So some of these aren't the best plays that we've seen. The last one I'm going to mention is going to be Costco. It's just because I love the way it's just forming out right now. If you go to the 4-hour chart, we had our key level at 552, and we're looking for that test all the way back to 565. So if you start to bounce around this level of 552 and you get some love on the market, specifically with XLP, that index, which has been so strong, we've been telling you all about. So again, you're looking for that 552 level to hold. If you hold this 552, which is your previous highs, you continue to look bullish. If that breaks down, then of course you're not looking to trade this. That's all I'm looking at for today. And I'm trying to keep this very simple, give you a very quick rundown of exactly what I was looking for. And the last but not least, I will tell you about SPY really quick as well. Now, remember when I made that video, what was I looking for when we were at these highs? I was looking for a retest of 417. Why? If we go back to the 4-hour, where was 417 at? It was our previous highs of both of those key levels when we go back to May and August. Look, the same key level. The top is right here, 417. So I would love to see a 417.5 test on SPY. Be very interesting for possible call setups to get a bounce once again if the news goes as anticipated and what we're looking for. More updates will be coming, so stay tuned to see you tomorrow.